Hello, good evening, and welcome to this evening's session on monetary formula. This is the usual monthly session we have on long-term investing and all things to do with how you make good use of your money. So today we'll be talking about the monetary formula, and then afterwards we'll take questions on the markets, the stock market, your investment portfolio. Any questions you have, we'll go through all that at the end of this short presentation. So what's monetary formula? That's what we'll be discussing. That's just a quick disclaimer I always have with all my presentations. Again, it's just to say everything I talk about is just based on my own experience. I am not a broker, I'm not a lawyer, I'm not an accountant, so if you need professional help and professional advice, you need to seek that elsewhere. So this is a very good quote from the great man himself, Warren Buffett. He says, if you don't find a way to make money while you sleep, you will work until you die. So the aim is trying to make, passive income and most importantly, multiple streams of income. So you're always trying to see how you can create as many passive, and the key word is passive income streams. So that's why I like the quote that if you don't find a way to make money while you sleep, which is what the passive income is, you're making money while you sleep, you will work until you die. And none of us want to work until we die. So this is where this monetary formula is very good in terms of help you sort of shape your mind in terms of what to look out for. And monetary formula is actually a mnemonic. It's a mnemonic using the word monetary, M-O-N-E-Y-T-R-E-E. So we're going to go through that monetary mnemonic, which was devised by Robert Allen. Robert Allen is the real estate mogul in the United States. So he devised this monetary formula. And like I said, just a mnemonic. We're going to go through what M stands for, O-N-E-Y-T-R-E-E. So it helps you in determining whether a business venture you want to go into will be viable and help you generate residual income, which is the key. So while you're creating multiple streams of income or creating different businesses, this monetary formula will help you think, clearly as to, okay, is this business viable? Is it going to create me passive and residual income? So let's go through the monetary formula. So the M in the monetary formula, the M stands for multiple streams of income. You want to choose businesses that can generate you multiple streams of income. Investing is one way because as we know, if you can invest in different stocks and shares in different companies that can generate you a dividend and they can increase in value. But even when you're looking at solid businesses, my favorite one now is agribusiness. Is a new business I've got into. But with agribusiness is a good way where you can generate multiple streams of income. So for example, with the goat farming I'm doing, just from the goat, you can sell the goat meat, you can sell goat milk, you can sell the goat skin, you can sell the goat feces for manure. So from one goat, you can have 5 or 6 income streams. So it's just looking for businesses that can, generate you multiple streams of income. Or you're looking for a business that is outstanding. So you're looking for businesses that has a unique product, a unique service, or information. So you want to sort of stand out from the crowd. You don't want to be doing the same thing, or even if you're doing the same thing as everyone else, you need to see how you can make that business stand out from the pack. What can make you stand out? What's outstanding about your product or your service or your information you're providing? And they always say you don't want to get stuck in between price and quality. So you either want to be the best out there or the cheapest. So you want to be the best or the cheapest. I always prefer you go for the best, because when you go with quality and try and provide the best service possible, you can then charge a premium price for it. But if you're not going to go for the best, then make sure you are the cheapest. But if you're not the best and you're not the cheapest, then you're just going to be nowhere. You get stuck in between and not be able to generate much income from that. So that's all in the monetary formula. You need to create a product or business that's outstanding, unique, and stand out from the pack. The N in the monetary formula is nothing down. Because lots of money leads to poor choices. Again, I've had personal experience with this. For those of you which have been for the course, I've told you my story in the past, going bankrupt and all that. And most of the problems that I had was because I had made a lot of money initially from my real estate business. I was flush with cash, and you start making silly decisions. So usually, when you're trying to work with little money or getting financing from institutions, then you make good choices because it's not your money. But the other good thing is that when you get into businesses without your money, then of course the profits are exponential. So nothing down is a good way. Obviously, it depends on which country you're based in. If you're based in the West, like in the UK, Canada, USA, then access to financing might not be difficult. Obviously, it has to be a good business idea. Even if you don't have access to financing, you can get partners and investors who can put down the money, and then maybe you can put down your idea or the unique thing to run it. So that's another way of looking at the monetary. The N in the monetary is for nothing down. You can start businesses without your own money. E is employee resistant. And I love this part. E is employee resistant. You want to outsource as much as what you do to other places so that you can concentrate on the core business. Unless you're a sole person that loves to be the boss, you like people swooning and falling after you and chasing you around the place and calling you boss. But if you're not into that, it actually makes more sense to outsource most of this work so that you can be lean and mean, and concentrate on doing what you're best at. So same here. There are quite a few businesses I run. I have a lot of partners, but we tend to outsource most of what we do. So I don't, if I have to say I have an employee, I don't actually have an employee. I don't have a secretary. I don't have a manager. I don't have staff. I just tend to get people. I have a guy who sort of manages, for example, the agribusiness I do, but he manages this at, I pay him a management consultancy fee. So he then he's not an employee per se. He just helps me run the thing, and you pay him a fee for it. And then I can concentrate on other things instead of me chasing people around the place. So employee resistance is one thing I really subscribe to. I don't have payrolls and salaries and all that, no. I tend to outsource most of what I do. So especially now in this day and age of technology and all that, it gets even easier to do that. So employee resistance is something else to think about. The Y in the monetary, you also want to look for high yield businesses, cash cows. You want businesses that, you're going to be generating a lot of income and a huge turnover. Again, this is actually why I like the agribusiness space, and that's why I've gone heavily into it. Because once you bought the land and put in the infrastructure like irrigation and all that, from then on, all you're just doing, the maintenance is actually quite cheap. And by the time you're harvesting about twice a year and selling your product, it's a real cash cow. Trend and timing, of course, that's the T in the monetary. You don't want to be involved in a business that there's no market for. You want to know what's trending, what's happening, what's there demand for, what are people into. What are they going to pay for? So trend and timing, you need to think about that. And like I said, you want businesses that will give you a residual income, passive income, the one that you're not there all the time working for it. That's where the monkey trap and the rat race comes in. Where you have, if you're involved in a business where you're there 24/7, you're always there, the thing cannot function without you being there, then that's not really a business. You've just got yourself a job. So you want businesses that will just give you residual income, passive income, where you don't have to be the one there. The E in the money tree, we're getting very close to the end now, is that you're looking for a business or product or service that is essential to everyone every day. Something that is essential to everyone every day, So, I'm just going to give you some example. I'm not saying you should do businesses like that, but, electricity is something that everyone else uses every day. You have to eat, you have to drink, you have to go to work, you have to use the internet, you have to go use transport. So that's just to give you an example of trying to think of what is essential to everyone every day. But the other things, if you sit down and think about that, that people use on a daily basis, and you can see how you can get into that. And then the final E in the money tree is enthusiasm. Enthusiasm, you want to have a passion for what you're doing. You want to have a passion for what you're doing. For example, I'm not a very good cook. I'm not excited about cooking. I don't love cooking. So even if there's huge money to be made in the restaurant business and the chef business, I just won't have any passion for that. It would just be frustrating for me. So I wouldn't even do that business. Or, events planning, I'm not a socialite. I don't like hanging around with people. So I'm not going to be into events planning and events business, even if there's huge money in it, because I will have no enthusiasm or passion for it. So you won't have a passion for whatever you're doing. So that is the money tree formula. That's just to give you an idea or an insight of what to look for in businesses you like to start to create multiple streams of income. And like I said, this mnemonic of money tree would help you in making those decisions. So this is just a passage from Ecclesiastes, chapter 11, verse 2. It says, invest what you have in several different things. You don't know what bad things might happen on earth. So again, you want to multiple streams of income, asset allocation, diversification. All these things are very important when it comes to investing and creating an income stream. Okay, so that's it basically for the formal presentation. So if you have any questions, comments, you can either raise your hands or send them through the chat box.